Last week when we spoke with Gary, it was about a dollar resurgence. This week it's a bit different. Gary, thanks for joining us today.
My pleasure as always.
So Gary, like we spoke about last week, the US dollar really did sting gold prices last week, but this week it's a bit of a different tune. Weaker US dollar, but gold prices aren't really reacting to it. What are you making of it?
Well, what we're looking at is actually kind of interesting. When we consider that from June of last year, we had a tremendous rise in the dollar. And during that time, of course, put gold under pressure. When we saw the dollar weaken, it came up to about 100 and then began to move down. And really what that created was the opposite of a salmon swimming upstream. In other words, they were swimming downstream because you had a weaker US dollar really adding to the price of gold. The interesting thing is even that was not enough to kind of take it out of this downward spiral that it's been in.
Now with non-farm payrolls being the big focus of the week on Friday, what do you think investors are doing right now? Is it kind of a sit and wait attitude?
Well, the stock market once again is hitting near those highs and running into a strong ceiling of resistance. So I think that they are waiting on the sidelines. A lot of players are looking to see if there's going to be any kind of a pullback in the equities markets, and that would be a move into the precious metals and other safe haven assets. But I think for the most part, the majority of investors seem to be vested heavily in equities.
Are you expecting any big surprises from Friday's non-farm payrolls print?
Well, we had some favorable numbers come out yesterday, and so I would expect more of the same on Friday.
All right, Gary, let's check out what you brought for us with your inserts.
Well, we talked about the fact that gold had broken below that key level at 1,200. It's drifting right now near the 85s, 82 areas, which are not the most recent lows at 1140, but they are lows that we haven't seen over the last month. If we cannot hold these levels, there's really nowhere for prices to go, but possibly to retest 1140.
All right, let's get to it.
There is absolutely no doubt. Gold has been under pressure, and significant pressure to the downside, for approximately the last 3 weeks. I draw your attention to the chart that I've just enlarged. This is a weekly chart, standard candlestick format. And what you can see in terms of recent price activity, first of all, we definitely have this downward biased and downward channel that is really unfolding right now. The last 3 weeks, of course, and this being this current week, which has not completed yet, but you can see that it's back near these lows right down here, and that also corresponds to this downward cascading channel line. Now, what I find most interesting when we take a look at gold is that we know that the dollar has been an incredibly big factor in terms of gold strength or weakness, price, decline, or ascent. And 3 weeks solid decline in gold. But let's take a look at our weekly chart of the dollar, because when we do that, what we see is an interesting scenario. And that is when we consider the last 3 weeks, weeks 1, 2, and 3, we had a tremendous surge in dollar strength. That, of course, would weaken gold. Last week, same thing, solid price ascent, closed about the mid-range, but nonetheless did close higher on the day. And that's when you consider that's since this market hit 100 and then corrected to approximately 93 and now has moved back up to just below 98. We've had this tremendous dollar slide this week. You can see it with this red candle. So we've got dollar weakness really contributing to the ascent or gold prices moving up. And it's almost like a salmon swimming upstream. It's going not against the current, but the current is actually moving it along. So when we see gold decline like we are this week, the really noteworthy thing is that it's declining in the face of a declining US dollar. And without that declining US dollar contributing positive value to gold, we would see a much larger decline than we are currently witnessing. So with all of that in mind, the real question is, where do we expect gold to go to in the intermediate to long-term basis? And to do that, I've pulled up a half-a-day chart, 720 minutes. We do have our current Elliott wave count. And when we look at our Elliott wave count, obviously we're in a bear count. We've had a bear market. We concluded our up wave C here in ABC and then went into a 5 count. 1, 2, a long wave 3 down. That's what took us to 1140. And our model right now is looking at the fact that up around 1230, middle of May, we completed this counter trend, wave 4 trend, and realize a counter trend on a bear count is always going to be to the upside. And our model is saying that we are probably deeply ingrained in a wave 5. Now, here's the key, and remember, this is a much longer term count. This isn't what I'm looking in terms of immediate action. For that, you'd want to sign up for our daily video newsletter, the Gold Forecast. But for a longer term view of the market, my expectation at this point is that we could absolutely go and test 1140 and even break that price and go to a new low. And as I said, the count and the forecast that we just talked about, of course, is our intermediate and long-term forecast. For those of you that are actively investing or trading gold and silver and want more up-to-the-minute information, I invite you to sign up for our daily video newsletter, The Gold Forecast. Simply go to our website, thegoldforecast.com. You will see a link to go ahead and sign up for a free trial. And it will be during our daily videos and special trade alerts that go out. We will give you specific recommendations and also our current models. So, for example, this week we were looking for the market to move up to about 1205 and then start moving lower. Well, if you take a look at this high, the high that we actually got was 1204.30. So the models that we're working with have been extremely effective in giving you parameters so that you can fine-tune your entry and exit levels for any of your trades or investments. Again, gold, our long-term forecast, and it's not looking that bullish.
Thanks, Gary.
As always, my pleasure, and I want to wish all of our Chart This viewers, even though it's a little early because we're coming on Thursday, but a great weekend and profitable investing and trading next week. Bye-bye.
And thank you for watching this edition of Chart This. As always, comments and questions are welcome at newsfeedback@kitco.com. Have a good one.